Ultimately, we're going to talk about those implications. We're joined this afternoon by Amit Jhingran, who is MD and CEO of SBI Life Insurance, as well as Gurmeet Chadha, who is Managing Partner and CIO of Complete Circle. Gentlemen, thanks so much for taking the time. Let me come to you first, Mr. Jhingran, just to understand what you think the implications of this will be. And let me put the caveat. We're still waiting for the bill to be passed, and we haven't seen the final outcome. And so therefore, what we're talking about right now is based on what we've seen in the makeup of the bill. With that caveat, do you think that there will be a change in the way that insurance is sold if there is a cap on commissions and if those structures are changed?
So, first of all, this amendment bill was in talks for quite some time, and the 100% FDI that the finance minister, honorable finance minister, had announced in the budget speech itself, that has come through with this. And I'm sure that this is going to open up the market. There is a large population in India which is even now does not have access to insurance, and maybe more players coming in, the international best practices coming in, the more technology-oriented products, more innovative products coming in, will definitely further increase the penetration in Indian market. As far as commission you were talking about is concerned, let us see. The IRDA had 2 years back changed the regulations and moved to expenses of management, and the industry has very well migrated to this new regulation. I am sure that the regulator will, while forming regulations under these new acts, will look into all the stakeholders' interests and ensure that the industry goes into a orderly growth in coming times.
Right. So just wanted to understand one thing. Yes, 100% FDI could lead to increased penetration. But earlier, when the FDI was increased from 49 to 74%, we have not seen many foreign players coming into the country. So do you think that if complete ownership is given to insurance company, then foreign companies could show some interest into the Indian market?
It is a good enabler provided by the ministry, by the government. And I am sure that the players, if they were looking for full control on their operations in India, will definitely look with more interest towards this market, which holds a lot of potential for growth.
Fair point. Gurmeet, thanks for waiting by. And incidentally, I was speaking to somebody who tracks the space very closely, the insurance space. And purely from the perspective of the issue that has been plaguing, let's face it, mis-selling gets done, and it's to a large extent because of the commission structure, right? And I was asking them what they thought about this, because 30 to 50% of your first year premium in certain cases in life insurance gets paid as commission, and as a result of which there is a tendency, or at least the temptation, to focus on acquiring customers very quickly, not necessarily thinking about the longevity. What do you think are the implications for the system as a whole and for bank assurance?
No, I think it's a welcome move to moderate commissions, because you're saying 30, 50. I'm aware of products which give sometimes 100%. I will not name players who've offered us, but we don't do insurance distribution. So I think it's something which eventually has to be done. But IRDA, has been doing it on a more calibrated model basis. So I don't expect a sudden drop in commissions to happen. Already products like market linked, ULIPs, etc. There's already been a sizable reduction, because at the end of the day you have to compete. If it's being sold like an investment product, it has to be competed. And then, the tax arbitrage went away in the budget, where above 5 lakh premiums, the capital gain exemption was withdrawn. So I think there is some near-term pain which will come to distributors, less to insurers. But eventually it is good, because anything which is good for client eventually leads to better penetration, better growth over a period of time. I think one thing which we need to see here is that, like we saw in a lot of small banks, a lot of foreign investors showing interest, in NBFCs, in Federal Bank, in RBL, you may see some renewed interest, from sovereign funds in terms of, either owning a business completely or entering into, because the sector hasn't done well for last 2, 3 years. From a return perspective, valuations are reasonable. And insurance as a product has good long-term growth potential. And I'm also of the point that why should an HDFC bank or an ICICI bank earn 5,000-6,000 crore commissions on selling insurance? That's not the core job, and that's leading to a lot of focus getting diluted in core banking, which is trade, FX, CASA, etc. So in general, it might be good for the banking health as well. So there'll be some near-term pain. But I think there'll be a lot of opportunities which will come up, and the insurance reduction in commission also will be more calibrated than what is being right now speculated.
Hi Gurmeet, Sharad here. Stock-specific reactions, PB Fintech, that stock has taken a tanking. What would be your view for this stock as well? Does this business model get impacted on a fundamental level? And apart from that, any good insurance play which you are liking?
So sure, there will be some impact, but what happens is when, we've seen fee commissions going down even in MF distributor, and eventually larger players become more stronger. Even if you look at mutual fund houses, once the TR dropped, there was an advantage smaller funds had. But look at the growth in SBI or Approved ICICI or the top five guys that done. So I think people with digital model have the ability to absorb and negotiate better, because, so for example, in online insurance distribution, they have a 90% plus market share. Overall, they are about 4-5%. And then they have, nicely pivoting towards PB Health. Then there is a loan marketplace they are focusing on. And from commission based, they are focused more on the life cycle model. So I think they will be able to pivot, but there will be an impact depending upon how big the cut is. As I said, you probably have to wait. I like some of the life insurers. I think some of them are available at very reasonable valuations. I think tactically maybe LIC on a private player, maybe HDFC Life, good persistency ratio, very good cost matrix. We also like ICICI Lombard. Off late, if you see the new car sale share has gone up, the retail health share is picking up. Their overall combined ratio is showing signs of improvement. And if you see the last 3 years earning CAGR, it's almost 24%. So, it's consolidating nicely and actually gaining market share in newer segments. So that's something we like. We also like Max Life with leadership change, Axis coming over. So there is some opportunities coming initially to begin with, maybe the insurers. And I think after some time, the large intermediaries, I think, will actually take advantage. You will see more consolidation.
Okay, interesting. Mr. Jhingran, just I'm curious because we've looked at the products that are sold by the life insurance space. And my understanding is that term is actually a product that has higher margins. So I'm just wondering, and ultimately this is best for the for the final person as well, right? Everybody needs term insurance. So from that perspective, do you think that with a change in this structure, if at all, there will be more incentive to go towards products that are like term insurance rather than bundled products?
So as a company, SBI Life has been focusing on protection segment for last 2 years. And if you look at our product launches, we have launched new products in the protection category, both on the banking app as well as in the open market. And most of these products are now very competitively priced. If you look at the data, you will see that the growth in protection in the total sum assured for SBI Life has been highest in the last financial year, and in this financial year also YTD November, the highest sum assured growth has been in the protection segment in SBI Life. So yes, definitely we need to move towards more term insurance, more protection for the customers, and that is the way forward.
Gurmeet, just a quick question specifically on the banks, and you mentioned that there's no reason why HDFC Bank should earn as much as it did, and that's fine, right? But the question is that they do earn, and do you see therefore a bit of a revenue hit in the short term, at the very least, if there is something that is dramatically changing on the commission side? And is there going to be an impact for the larger players at least?
there will be some impact. But as I said, this quarter has already gone by.
Yeah.
So any impact which comes from the next quarter. Also, the larger players have the ability to negotiate fees better because just for the kind of premiums they are doing. And I agree. I think even the wealth management arm of banks have become actually more insurance sellers, and rather than doing exact financial planning. So this has a bearing. If you're getting a 40-50% commission on a product, why the hell will you give let's say a regular mutual fund or any other product which gives you like say 1% kind of a trail? Second is as I said, the product wise impact has already started coming in. So banks have already moved from ULIP to more the assured bonuses, the saving assurance plans, etc. I think the advantage which the industry will get in this is that already if you see the digital distribution, if the plans which are cheaper with the kind of awareness we have, it is something like what happened with direct plans, right? As awareness picks up, premiums drop, more awareness would mean you need it's a much needed product. Some of it is mandatory. You need, for example, a car insurance. Health insurance is almost a necessity now. So I think overall it is good. It's just that will be a near-term impact. Some banks like ICICI, for example, what they have done in last few quarters is they've removed product-wise targets. So now they've moved into unit profitability of branch, which means the branch has to do numbers irrespective of what products you are pushing.
Interesting,
right?
very interesting. Very interesting. So it's a good point that you raised. On that note, let me thank Mr. Jhingran for joining us and for giving us perspective. Very important there. Mr. Jhingran, thanks so much for taking the time.